Welcome back to Everything Money. In this video, you will learn about Intel. We will show you the financials using our software, and we'll head toward what you should be paying. We'll show you our stock analyzer tool. We'll let you know why we own Intel. We've loved this company, this stock, and why we continue to have it in our portfolios. If you want to trade Intel at a quicker pace, we will go over to Mo at the end of the video. He'll show you all the charts, all the trends on how money can be made on the ups and downs, day trade, swing trading, etc. You'll do it with him. But first, why should you watch this video? I bring your questions about Intel to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll give us a mindset about investing with a beaten down company like Intel and why we love it so much. Paul, I know we've done this ad nauseum. Tell us again why you're in love with Intel.
Thank you, Seth. First off, follow us on Instagram, Everything Money Investing, and don't forget to follow our personal accounts. Every single day, if I don't see my subscribers grow by 50 to 100 a day,
what happens?
I literally have to cry at night. I call Seth sometimes. He comes over, he holds
coddle
me,
you, yes.
He pets me. So guys, Intel, if you've watched our channel, I'm a buyer of Intel. I like Intel. I like it sub 50. Now it's over 50 bucks today. I think it's 55. So what's the big news? They bought a company in 2017 called Mobileye, and it's a leader in the whole autonomous driving whole business, and they're taking it public, and it's now valued at around 50 billion, I read. So this is big money for Intel. That's a big profit number. Obviously, they're taking advantage of the fact that the autonomous car and everything that's going on is becoming a big business and becoming a big hype. They're going to take full advantage of that entire market. Now, they're not going to get rid of their ownership. They're still keeping a big chunk of the ownership. We don't know exactly how much yet, but they are keeping a big chunk. But you got to look at it. Let's go to our exclusive software just to start by looking at this. We'll pull up Intel. You know, they paid $17 billion for it. It's valued at 50. The company itself, Intel right now, is $218 billion. So at $34 billion in profit, $33 billion, that's 15% of the business right there. That's why this has been such a big, important aspect of the Intel surge. As you can tell, Intel's up 5.5% today to $53 already, right? I own Intel. I like it. We're going to go through the 8 pillars right now to show you why. So, guys, to start, Intel is a $220 billion company. Our first pillar, we want the 10-year PE under 22.5. It is 12, almost half. Boom. Pillar number 2, we want the 5-year return on invested capital greater than 9%. It is 12%. Check mark there. Now, Sethi, 2.6% dividend yield is double the market. They pay $5.6 billion in dividends, but as you know,
can they afford it, Paul?
Can they afford it? Can they sustain it? So right above in our exclusive software, I put last year's free cash flow and the 5-year average. They can easily afford it.
Yeah, plenty. Okay.
Yes, easily afford it. I want that number well under half, and it is well under half. Okay, so far 2 checks.
Yep. Pillar number 3 is revenue growth over the past 5 years. We obviously want them to be making money, Paul.
Well, we want them to increase their revenue.
Of course, sorry.
Revenue does not mean profit, which is a very common misnomer.
Many people get this confused, and I still get confused, yep, for sure.
So we go to our income statement, our exclusive software. We go back 5 years, $62 billion. Last year, $78.47, the last 12 months. Check mark there. Okay. Pillar number 4.
Profit growth.
This is where we want the profit growth. We scroll down. We go to the net income line on our income statement. 13.85 to 21 billion. Check mark there. So guys, a lot of people will sit there and tell you that AMD is crushing Intel, etc. Boy, this is quite the crush, huh? Intel's, now granted, they've made some acquisition. The revenue for the Mobileye business is up 40% in the last year, but it's not still sizable for the company. Pillar number 5. We want shares outstanding decreasing, especially on a cheap company like this. We want them buying back their shares. This is giving you, the investor, more percentage ownership. Because as they buy back shares, you keep the same number of shares, but it's split amongst less and less shares. Therefore, your percentage ownership is going up. Very simple. So we go back 5 years, 4.69 billion down to 4.06. Check mark there. Look, 10 years ago, they had 5 billion shares outstanding, Seth.
Jeez.
They're down 20% in number of shares outstanding. So this is all around a good thing. We have 5 check marks so far.
Boom. Pillar number 6 is total long-term liabilities divided by their 5-year free cash flow. Tell us about their debt, Paul.
So what we do is we go back to the main page of our exclusive software. We go to the 5-year average free cash flow, 15.7 billion. I like to multiply that by 5. $78.5 billion. So what I want to see is I want to see their long-term liabilities under 78.5, because Companies, just like people, the less debt they have, the more likely they are to survive recessions or breakdowns in the business, right? Because remember, with debt, there'll be things called covenants. If they hit certain parameters like revenue drops or profit drops, the bank could call these loans out. We don't want that. So the less debt they have, the more likely they are to sustain their business. So we want it to be under 78.5. We go to the balance sheet of our exclusive software. We scroll all the way to the bottom. They have $48 billion in long-term liabilities. Well under the 78.5 number. So check mark there. Pillars number 7 and 8 have to do with free cash flow. Let's go to the cash flow statement, Sethi.
The grand salami.
Free cash flow. Cash from operations less your capital expenditures. You can do one of 5 things with the free cash flow. What's so funny?
Because Mo's laughing.
Why is Mo laughing?
It's like the grand salami.
I don't know why the hell I said that.
I like the grand salami.
Yeah, but when you say it, it's like the grand salami. He's like the grand. What word should I use here?
You caught me. You caught me. Oh, man. Okay. Go ahead, Paul. I'm sorry about that. I screwed it all up.
Free cash flow is cash from operations less your capital expenditures.
You can do 5 things with it, Paul.
What are they, Seth?
Oh, God, don't help us.
You're the one that brought it up. I wasn't going to ask you.
You weren't even going to mention free cash.
But you sat there and interrupted.
You can buy back shares. You can buy back shares. You can buy companies. You can make acquisitions. You can pay down debt.
Yep.
You can, oh boy.
Pay dividends.
You can pay dividends, which they do, and you can reinvest in yourself.
Correct.
Of course.
There are 5 things you can do.
How dare you?
So, on the free cash flow statement of our exclusive software, your Uncle Paul here added this line.
Didn't he?
That does not exist on any other free cash flow statement. So, 5 years ago, 11.78. Last year, 17.33. Check mark there. And our final metric, we take the 5-year average free cash flow, 15.7. We multiply by 20 as a starting point. It's like your PE, but for free cash flow. We want to start here. 15.7 times 20 is $314 billion versus the $218 billion market cap.
Yeah.
It's a check mark because our desired market cap is way higher than our actual market cap.
So if we're looking to buy all of Intel all at once, we'd love to pay around $314 for it, but the actual retail price is $220. It's incredible.
Now, you're out there going, oh my God, I got to buy Intel. Wait a second. There's more to the story than just that. Remember, if a company is growing a lot, you should be willing to pay a higher multiple. If the company is decreasing or slow growth, pay a lower multiple. We start at 20, but we don't know that's the exact number. What we're going to do first is we're going to look at the 8 pillars. It is an 8-pillar stock. Again, this doesn't mean you go out and buy it. We will then use the stock analyzer tool. This is our most famous part of our software. It will allow you to use those assumptions because every investment is the present value of all future cash flow. But we don't know the future, so we have to make assumptions about the future. I like Intel because there's such a long history. We can sit there and look at it and say, hey, it's going to be around for a long time. And let's go see what kind of revenue growth they're going to have. So we go to our stock analyzer tool. The first thing we do is we pick years of analysis. I always go with 10. Now, since companies are going to be around for a long time, we make 3 assumptions. So, Mosafine. Let's go low, middle, and high revenue growth assumptions. Now remember, AMD is chomping at the bit, but the world chip market is increasing. So even though I think Intel will lose market share to AMD, the pie is getting bigger and bigger. So give me some revenue growth numbers.
What would your high side be?
4.
4? 1. That's what I was going to put. 2, 3, 4.
2, 3, 4. I agree. Profit margin.
I think you can stay consistently in this mid-20 range.
So 23, 24, 25?
Yeah, do that.
Okay, free cash flow margin?
Same.
The exact same? But their free cash flow hasn't been, it's been lower.
Make it lower. What did I say, 23, 24? Maybe 20, 21, 22?
I agree. Now, PE.
12, 14, 16?
I agree. Because you know why? Even though the market share is going to decrease, it's still Intel. It's still a market leader. It's still got a great balance sheet. I'm okay with 12, 14, 16. And they're investing a lot back in their company now. They could end up coming with some great technology that's going to... They just partnered with Taiwan Semiconductor to start selling their new 3nm, nano, whatever. This could be the future of chips.
And they have a good relationship with Taiwan Semiconductor because everything that Mobileye company does is done through Taiwan Semiconductor. Yeah.
Oh, I didn't know that.
Yeah.
Excellent.
So that's
okay.
good. They have a good relationship.
And finally, guys, our desired return, 12.5%. And why do I do 12.5%? I do it because if you buy an ETF, you can make 9 or 10%.
So simple. Just buy it.
Just buy an ETF and go to bed at night and wake up 40 years from now really, really rich. So in order to buy an individual stock and you have some margin of safety, you want a higher return. The higher return, the lower the price. So we hit the analyze button. Okay. Like I said, I wanted to buy it sub 50. Our low number is 40 to 46. Our high number is 60 to 70. Our middle is right where it's at right now, 49 to 56. Now, again, these are assumptions we're making. If we change these assumptions and we sit there and say, listen, the world's revenue growth is going to increase. I mean, the semiconductors, let's go 357, which I don't think is likely, but it makes it all day here, all day. Again, every investment is the present value of all future cash flows. So I'm still sticking to 2-4% revenue growth, and that's what it's looking like.
If you're interested in these numbers, especially with Intel and other companies, you can have this software. Paul, tell them how they can get it right now.
What we have done here is we created the software because people wanted to be able to, our users wanted to be able to analyze companies without waiting for me to discuss them on the show. So we created the software. You get everything you see here. You get it all on your mobile phone, literally everything on your mobile phone. So you're on the go, you can do it. You get 30 years of financial data. You get access to Seth Moe and I. You get all the 8-pillar analysis, the stock analyzer tool. You even get everything on the main page that's coming soon, which is things like the real estate analyzer tool, stock screeners, watch charts, chart trading. Everything here will be coming to you. You get retirement calculator. You get the 8-pillar portfolio. You get exclusive daily content. We post 2 or 3 videos a day only for the people who subscribe to our software. But most importantly, you get access to over 6,000 people in a very organized chat to discuss your investment ideas, because Seth always says that he felt alone in how he looked at investments. And a lot of people around the world, if you're around people, you don't necessarily know who's talking these ideas. It allows you to go discuss these ideas. You can go discuss any stock we've discussed today in a group to get everybody's ideas. This is all available for only 90 cents per day. 90 cents per day, you get all of this. It's less than a cup of coffee. If you can increase your returns or decrease your losses by 1 or 2% a year, it could lead to hundreds of thousands, if not millions of dollars. 90 cents a day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of directly going to everythingmoney.com is we're not big enough yet to charge sales tax, so you'll save that for quite a while. So 90 cents a day, guys.
And if you're looking to trade Intel at a quicker pace, you can join Mo in the morning. Mo all day. He fondles your thumbs up all day in the Bidnass Nation, teaching you how to trade. Mo, what's going on over there? Who caught this run and what's going to happen with it moving forward?
All right, so a lot of questions come with Intel. And specifically, when you look at an Intel chart, you just see these gaps that are all over the place because news really drives Intel. So right now, you have a gap that everybody was wanting to fill. Unfortunately, it filled on another gap. So I think this gap is going to fill. I'm not going to lie. I took profits on this morning. This reaction to me to this
Mobileye
doesn't do anything for me. I don't think that it's going to stay. Plus, it created this gap. I sold it up here at 55 bucks. I'm going to wait. I'm going to sell puts at 52.50 and grab it back. But with this gap that filled, this is going to come back and fill again. So why don't we take a look at the daily chart and just see what moving averages we have to play with. So right now we're between the 200 and the 100-day moving average. For the stock price right now is already really close to that 100. So if this drops below the 100 and closes the day down here, it's going to be a tough go for them. And I do think that this stochastic will roll over and you can short it. So right now, honestly, I think that this is probably something that you want to throw on a short-term watch list to go short on. And I think you'll probably be able to run it back down to that 25-day moving average or a little bit below. That's probably not what everybody thought I was going to say, but that's what I think. And right now, and Paul, you'll like this. This is actually a really good short right now on a day trading chart. You're under 20%. You're getting good selling volume coming in, and you're creating good engulfing candlesticks. You could have added to this thing right around $54, and you are still in this thing, and it's at $52.90 right now. So this is how easy this is from a day trading standpoint. Below 20%. Good selling volume, engulfing candlesticks, ride it out until it pops over 20% on your stochastic, and you take your profits from there. So if you want to learn these rules and learn how to trade Intel, come and join me. You get access to the Trading 101 series, which is all of the rules that I just talked about. You get the Employed Trader series, which is 6 stocks that I go through every single day. If you're an employed person and can't sit there all day, I kind of do the work for you. You get my exclusive monthly seminars that happen on a Saturday, and you get the Discord community, which is 950 plus people, and it's a great place to be. Come and join us.
That is our take on Intel. We'll keep you updated moving forward. What happens with Mobileye? We still own this company. We love this company, and a lot of our fans in the Everything Money community are big fans of this company too, Paul. So as long as these numbers stay in the wheelhouse of a value investor, we will certainly be in love with it, of course. So final thumbs up on the way out. Join the community. You're going to love the software. See you next video.